related, professionals like CPAs, service businesses. I think I'd be hard pressed for someone to name an industry that I don't have some experience with.
So that's one of the reasons why I asked you on today, because of your breadth of experience and what you've seen. And how long have you been doing this?
14 years.
14
this
years.
month, actually. Well, last month, 14 years, yeah.
So in all of that time with all those different types of businesses, I know from our own conversations that you've seen a lot of different situations and scenarios.
I have.
So go ahead.
Well, I was just going to say, it's every once in a while something new comes up, and it's kind of fun when that happens. But for the most part, I've just seen so many different types of challenges, whether that's something that's coming from the SBA, from the bank. Sometimes it's from outside sources within the deal. So I've had the benefit and pleasure of working with a lot of different people and helping them solve a lot of different hiccups along the way.
And that can be fun and frustrating because I know you just want to get the deal done, right? And you want to get the deal done, and you want both sides to be happy with the deal. So, when you're buying and selling a business, it's how different is it from buying and selling real estate?
I'd say it's very different. So especially if you compare it, a lot of people try to compare what I do to selling a home. There are very few components that have overlap. I think on the sell side, really the only overlap is that, we do come in and do a free valuation for people who may be interested in selling their business. And, certainly we market the business and are only paid as a success fee when we close the deal. But really, that's where the comparisons end. We are very involved with evaluating the financials, which of course becomes part of the valuation process. So we are a lot more technical than you would expect from either a residential or frankly, even a commercial real estate agent.
So you're looking at all aspects of the business when you see it. You mentioned the financials, but you're looking at everything, right? How the business functions. You're looking at employees and who's there to do the work and the licenses and everything, right?
Yeah. So, and maybe the easiest way to answer that question is to talk about what a lot of buyers look for. So by kind of highlighting what the buyers look for, it I think will answer some of the questions of what I handle on the sell side. So buyers are looking for customer diversity. They don't like to see that one customer is 50% of the business, as an example. They like to see that there's some depth of staff. We're really talking about small business here. So we're not expecting hundreds of employees by any stretch. But certainly it's nice to know that the seller can step away from the business for a week or two and have a little vacation, and that there's someone there that can help in that regard. So, doing a little bit of an org chart, making sure that there's some folks out there that can help if you're absent from the business. Ideally increasing trends, although, with COVID, all of us have been affected and impacted differently. And, of course, good financial records. And then, of course, good documentation and legal paperwork. So if there are contracts involved, it's important to get those reviewed and make sure that they're transferable when the business is sold. So that kind of covers sort of the highlights. Inventory, we didn't talk about that, but making sure you've got good and marketable inventory, that your facility has, if it's a retail type location where your customers are coming to see you, even if it's not traditional retail, it would be important to have a lease in place if you don't own the building, and that lease can be transferable, and that there's a little bit of elbow room to grow. People don't like to come in and see that everything is filled to the kilt and there's no more room for growth. So that's just covering a few of the top level items on a very high detail.
So a couple things I want to point out there. Number one, the legal pieces that you mentioned is just one subset of a whole variety of issues that need to be dealt with. So when I'm brought into a deal, I'm very focused on the legal pieces. You are more like the quarterback of the whole project and seeing all the different pieces and moving them all forward. So when I'm doing a deal, I love when I see a broker involved because that helps to coordinate all the different pieces. And I especially love it when you personally are involved because I know you're a really good quarterback. So
I appreciate that.
So that's a really good overview of the process of a broker and an attorney. And we'll dive into that a little bit more. So today's topics, for those of you who are logged on, I wanted to give us a few more minutes before we dive into the nitty gritty. So the topics we're going to talk about today is what are we seeing right now during the pandemic? Well, what are the differences in the trends and stuff that we're starting to see? We're also going to go over what are some motivations of sellers right now? What are some motivations of buyers right now? What are the stages of a business sale? All these different components and pieces that are normal in any day. So let's go ahead and get the pandemic part of this up front, because I know some people are a little bit more concerned about this. Does the economy shift? Is the pandemic causing any issues? So let's talk a little bit about what you're seeing with buying and selling businesses during this crazy time.
Of course. So when the pandemic first hit somewhere in March, we did see an extreme slowdown. So we were very, very quiet for really almost 2 months. And then it was almost like someone turned the tap back on, whether that was pent up demand, I'm not sure. Probably some of that, but we just got exceptionally busy. I've even talked to some of the other brokers out there, and most of them are reporting the same results. So the last 3 or 4 weeks have been very busy. I have noticed that it seems like the larger businesses that I'm assisting are getting a bit more activity than some of the smaller ones. Certainly some of the industries that were more heavily impacted by COVID, frankly, I'm not getting the activity I'd like to see on them.
What are some of
But
those industries that you're seeing not as much
I mean,
activity on?
as an example, I'm assisting a valet service with the sale of their business. And as you can imagine, it's a higher end restaurant that typically relies on that. I was talking to a business owner today, and they're a food wholesaler. So they also cater to the high end restaurants. So they're really feeling an impact. Um, my regular restaurants, if you will, the ones that are either more fast casual or family related dining, are really not doing that bad. Some of them have experienced virtually no slowdown. Most of them had a period of a few months where they did notice, obviously quite a slowdown during that period, but most of them are reporting that business is picking up considerably. And in some cases, they're seeing glimmers of hope that their numbers are actually exceeding the numbers they had earlier in the year. So it's certainly not enough to call it a trend yet. Then there's a handful of businesses that I work with that are positively impacted by COVID. So, for example, I have a water remediation company who now has added COVID cleanup to their plethora of services. So, there are a handful of folks that are very positively impacted. Construction, we were sort of expecting to see more slowdowns than we have, but they seem to still be plodding along. There was a bit of a hiccup since there was a time where the permitting office had been closed. So there was a bit of a hiccup there, but they seem to be steady Eddie. So certain sectors that I would have expected more of an impact, we haven't seen them, at least not yet.
So let's talk about what are some of the motivations. So when this whole thing started, you already had businesses listed for sale. Mm-hmm. Have you seen more businesses start to be listed now that that COVID has happened?
Not as many as I would think. And I think I have a theory behind that. So yes, I've been contacted by a handful of folks that really were thinking about moving on anyway. But now COVID was sort of that, forgive the expression, nail in the coffin for them, where they're just not doing that well. They're really over it. And, it's really turning into some form of asset sale or I hate to say it, fire sale. But I think that the other businesses that are stronger might be afraid to look at selling right now because I think they're worried that they're going to be negatively biased because of COVID. But I don't believe that that is the correct thinking here. I think there are still a lot of good buyers out there, whether it's private equity or even individual buyers. I think that number is going to grow for a few different reasons. There are certainly some folks that are going to have corporate downsizing. Here again, whenever something unfortunate happens, people realize that they want to be in control of their own destiny. They no longer want to necessarily report to the corporate machine. So we do expect some people to come to us for that reason. But to segue something that you mentioned earlier, the banks are making it easier in the sense that the SBA has, as part of the CARES package, 6 months deferred principal and interest payments. So that means if they close the loan by September 27th, so the time is short, they're not going to have to pay the first 6 months of principal and interest on their loan, which is a phenomenal incentive.
Absolutely.
There's still some things we need to work out in terms of the third-party valuations that are occurring and how they're going to treat this COVID factor. But the initial word on the street is that they're going to treat it a lot like we Floridians treat hurricanes. So if there's business interruption, we just extract that portion of time that's impacted because of that hurricane. And then we just normalize those revenues and expenses as if that time period did not occur.
Interesting. So we're going to circle back to the whole loan, SBA interest in a few minutes. I want to really dive into this sellers. So you're saying that strong sellers, businesses that have really strong numbers are doing well, who may be considering selling, might be a little bit turned off by the fact that their numbers dipped during COVID. And so what you're saying is that it looks like when banks are looking at valuations, that the valuations are going to extract that little piece of time that says, we're not going to count that against you because we see that you've had good numbers before, and then we see that your numbers are looking strong again after. So I think that's important because, a lot of times sellers are really worried about getting and wanting to get top dollar. And so even though sellers might be thinking maybe they'd planned ahead that this was the time that they wanted to do it, or maybe they're having some health issues. The business is fine, but them personally, they're having some health issues, or maybe there's other personal circumstances and they're just reluctant to go ahead and list their business right now because they're worried that they're not going to get the best deal, for it. So what do you say to those people? Do you still think they can get a good deal?
I still think they can get a good deal. Absolutely. Because again, I think with a lot of people feeling that way, we're not going to see as many, we'll still see the fire sales, but I think that a lot of folks are going to hold off. I saw that during the recession. So the last big recession we had, there were a lot of good businesses that were afraid really to list their business because they didn't think that they were going to get the multiples. But what we saw is that the multiples really didn't change that much during the recession. It was rather a natural byproduct of people's sales going down, that the multiples went down as a result of that. But this is a different situation.
What is a multiple for those people who aren't familiar with how this works?
That's a great question. So there are a couple of different ways that we value businesses. But when we talk about multiples, that conversation is usually around a multiple of EBITDA, or if you're a smaller business, seller discretionary earnings, and I'll explain what that is. And then we also look at sometimes some percentage of sales ratios. But the big one is a multiple of seller discretionary earnings, or EBITDA. EBITDA, for those of you that don't know, is earnings before interest, tax, depreciation, and amortization. So basically, we look at the net profit of the company. And if you're a smaller company, we look at what it would take to replace you as the business owner working there on a daily basis, working your 40, 50-hour work week. So we look at the net profit, we add back interest, depreciation, amortization expense. And in the case of seller discretionary earnings, we also add back what you're paying yourself in payroll, any perks that you're running through the business, because we all look for different ways to give ourselves perks to help shelter us from tax. And sometimes you also have some one-time expenses that we would consider. So if you had an unusual purchase that you made for the company that was expensed, those are also some things that we do to come up with this adjusted number. And then the multiples are then applied based on your industry. So for example, 2 to 3 time multiple is a very generic answer to the question for seller discretionary earnings numbers.
So I know Bianca just went over a whole lot of information, and
sorry. You could do a whole topic just on this.
Exactly, and it gets really deep and complicated. If you have questions and you want to type them in the chat, we will come back to those at the end of the webinar. So on your chat box, if you want to go ahead and type in some questions while she's talking, go ahead and get them in line. I'll come back to those towards the end. Your question.
Contact me directly, and I'm happy to have a conversation with someone who really wants to dive deep and understand more.
Very good. And when we come to a pausing point, I'll have you type in your email in the chat box as well. All right. So as far as sellers go, we've talked about what are some of the motivations that sellers might have right now. Maybe they were already listed. Maybe they're considering listing. We talked about maybe being nervous with the economy, and you've addressed some of those things. What are some motivations for people to buy right now? What are you saying?
Yeah, so like I said, I'm actually working with a gentleman right now who had made the decision to take a package to leave his corporate job. This was even prior to COVID, just because he was ready to be an entrepreneur and be his own boss. He knows he works hard, so he'd rather work hard for himself and for someone else. So he's a good example. And again, as I mentioned earlier, we do expect to see more of those kind of folks as we see more of these reduction in workforce situations for people.
So let's talk about, not only are people looking either they're voluntarily looking for a change out of corporate, or they're involuntarily looking for a
Mm-hmm.
change because of the
Mm-hmm.
layoffs and downsizing. And what I'm seeing is this is a pretty good time for them to be looking at buying a business. And one of the reasons that you've already mentioned, I want to talk about a little bit more now, is the financing. What's
Mm-hmm.
going on with financing of business purchases?
Yeah, so as I mentioned earlier, the big benefit right now as part of that CARES Act is if they close their loan by September 27th, they're going to get the 6 months principal and interest free. So they're literally going to get paid that amount. They're making those payments. The government is making those payments for them. So what a great way to ramp up your business and conserve cash flow by taking advantage of that. So getting a
Amazing.
loan, especially backed by SBA, is never easy. So I don't want to say that it is, but of course, a good broker can help with those steps in that process to make it streamlined. To touch on an earlier topic, it's going to be more important than ever for sellers to make sure to stay on top of their books and records, because now we're going to look at a more granular level. Before, we would have more on a quarterly level at most. Now there are going to be some need at times to look at this almost on a weekly level. And I've
So that
talked a lot about individual buyers, but I wanted to just briefly touch on private equity. But finish your thought, Laurie. I'm sorry.
No, that's okay. Go
Are you
ahead and
there?
do your private equity. I'll come back to it.
Okay. So on the private equity side, there are still a lot of companies with money. They are looking for, and again, I think that the folks that are minimally impacted by COVID or have seen the rebound are great candidates for private equity, because private equity, I think, is a little scared of those that have been heavily impacted by COVID. But they have this money they have to spend. There are a certain number of deals that they're obligated to do. So they're definitely active. So some of the folks out there that are a little bit bigger or potentially could be an add-on in an industry that a private equity is already in. So usually, and again, I hate to put a particular number on it, but if usually the private equity doesn't have interest until you're at least $1 million in EBITDA, but that can vary, especially if it's an add-on.
So explain what private equity means.
So it means a lot of different things, but I'll try to give you a very generic answer to that question. So basically, it's a group or a company that is formed specifically to invest money into businesses. And there's a lot of different ways they can get their money. Sometimes there is institutional debt involved, but a lot of times there are outside investors. There's some families that come together that are looking for investment vehicles. And we see the private equity is always pretty active, but especially when the stock market is relatively volatile, people are looking for other ways to diversify their portfolio.
Okay, so that means that these aren't people that are wanting to step in and run the business.
Correct.
These are people who are wanting to invest in a business and realize a return on that investment.
Correct. And what they would do is either they would want to keep the seller involved, either because the seller has a percentage ownership that continues with the business post purchase, or that they are hired as an employee. So at minimum, they want a very good solid transition time. But in some cases, they let the seller stay on. So sometimes seller asks me, well, if I'm selling, why would I want to do that? Well, it's taking some chips and some risk off the table. So it's allowing you to cash in a fair amount of that hard earned equity that you have in that business, still keep some of it. And these private equity groups, they create an infrastructure. They help the business owner. So there's going to be a lot more support than one would get if you're just an island. And even if you were to sell the whole thing and just maybe stay on transitionally, they'll bring somebody on board to run the day to day of the company if there's nobody already in the ranks that can rise to that occasion. But to come back to those that keep a percentage of interest, they may have an opportunity at the second bite of the apple, as people like to say, which means, the private equity may have an idea that they're going to grow it, build it, and sell it 5 years or some number of years down the road. And that would give that seller with a equity stake interest an opportunity to make another chunk of money down the road.
Out of all of the deals you do, what percentage is private equity?
I don't know that I have a percentage figure. I would say it's relatively small in terms of number of deals. Usually it's disproportionate because the private equity are going to be the larger dollar number of deals. So percentage wise, it's probably a decent sized chunk. Number wise, it's relatively small. Because keep in mind, I'm doing business brokerage. I'm not doing middle market. So I comfortably handle businesses within several million in EBITDA. But usually much beyond that, it goes into the middle market realm.
Okay. So back to non-private equity. If you've got a buyer who's looking to step into the business and manage and run it as their own business, and we've talked about there's financing available through the SBA, there's conventional loans as well. Do you see banks doing conventional loans, non-SBA loans right now?
No, it's relatively rare for me to see conventional in general.
Okay.
Conventional generally has a much shorter amortization and a much larger down payment. So it's harder to get a business to cash flow that way. With an SBA backed loan, they're going to get a 10-year amortization if it's business only, longer if there's real estate involved. Some of the upfront expenses are a little bit higher, but usually the interest rate is good and you just can't beat that 10-year amortization. So that's conventional really only comes into play if it's a competitor and already someone with an ongoing existing business that's buying maybe an add-on business or maybe even buying a competitor.
Okay, so if you have an SBA loan and you go through the process, I mean, buying a business is not a simple task. So
No.
adding on the SBA application process and you go through a much bigger process than normal for the SBA because the government's backing this loan, right? So so you go through the process. It's not extraordinary. I've heard people say, "Oh, I don't want to do SBA because that's too difficult." Listen, if you're buying a business, you're already going through some difficult pieces. Adding an SBA application is not that much more adding to the process. So, and the benefits are just really, really good, especially right now. So I want to talk a little bit more about motivations for buyers. Not only are interest rates are good, it's opportunities because people are leaving corporate voluntarily or involuntarily. And despite the fact that we've got really good businesses that are listed that are strong and can require top dollar, we do have some good deals on the market too. And that might be that maybe it's not a fire sale necessarily, although there probably are some of those on the market as well. But there are people who have personal circumstances right now sell quickly.
Absolutely.
And so there are some opportunities. I'm assuming that you're seeing some of those as well.
Absolutely. Yeah. So people are coming to me either because, they are just absolutely ready to be done and they maybe aren't as profitable. But to your point, there are some folks that necessarily aren't, it's not that they're doing poorly financially. It's just that COVID may have been the straw that broke the camel's back, as they say. So they're just over it. They're done. They were already looking or considering selling the business. And now it's like, it's just one more thing I don't want to deal with. I'm ready to move away from this business, whether they have, whether they're retiring, whether they have another business interest. Some folks have other business interests that are actually doing better than maybe the other businesses that they have. So they're looking at just kind of narrowing their focus. So yes, there are certainly some opportunities to be had for some folks.
And then what I'm seeing a lot of the deals that are coming through our office that are not involving brokers are the ones that our business is acquiring another business for expansion. And do you see some of this as well from the broker side? Do you see businesses coming to you wanting to expand by purchasing maybe some of their competitors?
Yes. Yeah. So we do see that, that there is an opportunity for folks to come to us for us to look at their particular industry and see what we have available that might be a fit. So absolutely.
So even, within industries, if you see that you want to expand and you want to grow, and there's opportunities right now, especially with low interest financing, and there's opportunities and the timing is right for the industry and the market, there could be some advantages to buying up a competitor that might be for sale, and that's an expansion technique that some businesses use.
Absolutely.
So going through the process, not just with COVID and the pandemic, normal process, what are some of the pitfalls that people should watch out for when they go to either buy or sell?
Well, I think the biggest one on the sell side is making sure you have your books and records in order and having them up to date. I feel like I'm always having to chase people for those financials, and then they have to subsequently, in some cases, chase their accountants for that information. So just staying on top of that, getting ahead of the curve. As I alluded to earlier, with COVID in place, those financials on a almost weekly level are becoming far more important than they ever were. Not that they weren't important before, but it is just really, really important that folks get their things together. On the buy side, I think the first thing that comes to mind is I think buyers should look for a broker. And I'm not just saying it has to be me. There's other great brokers in town, but try to develop a relationship with one person that can help get to know them and what their needs are. And then that broker is going to help them not only find the right business, but put processes in place. So maybe they don't have a CPA that is familiar in how to do due diligence. Maybe they don't have an attorney that knows how to do these type of business transactions. Brokers who do this all the time have I always like to say a proverbial Rolodex, right? I like that imagery, a Rolodex of the accountants and the attorneys that know how to do these things. So getting team members in place to work with you as you move forward through this process. And then the buyers getting your own affairs in order. Yeah, one of the big answers that I get, which always gives me a little chuckle, I ask a buyer, well, how much would you like to invest? So I'm not asking you how much you have in your bank or how much you have in your stocks, or how much equity you have in your house, but rather, how much are you willing to put down on a business? And the typical answer is, well, it depends on the opportunity. That is a very, very difficult answer, because we have opportunities that are $5 or $7 million, so a $5 million opportunity might still qualify for SBA, but you're going to need $1 million down perhaps. So then the question is, do you have $1 million and are you willing to invest it? So most of the time the answer is no. Realistically, that's a big number, and there aren't that many buyers that have that number. So, it is important to really consider what's important to you and your family in terms of your comfort level with investing. Are you comfortable leveraging your stock? Are you comfortable leveraging equity in your house? Those are all important questions that I think buyers need to sit down as a family and discuss in advance of looking at a business to buy.
I want to flesh out a couple things for buyers, and you recommended that they use a broker. And I want to reiterate that, because for buyers don't pay the broker fee, right? The seller
Correct.
pays the broker's fee. So
Correct.
It's no cost to the buyer, but yet you have someone there who's familiar with how this works, helps with the processes, helps with the go-between, and it also can cut down on a lot of legal fees as well. Because if you don't have a broker involved, then the attorneys, we are, one on the side of the buyer, one on the side of the seller, we're doing a lot of the quarterbacking that a broker would normally do. And of course, it just increases our fees because we're involved a whole lot more. But if you have a broker that knows what they're doing and can do all the legwork and get it all organized and pull all the balls down from the air, and then hand an attorney and say, here, this is what needs to be done, obviously our legal fees are a lot less. And the deal goes much more smoothly because you've got somebody like you as a broker can go from between the buyer and the seller, and the communication pieces are just a lot easier. From the seller side, yes, you have to pay for the broker, but you don't have to interface with every single potential buyer that comes in the door. Because some people come in the door and they're not necessarily qualified buyers, and you're wasting your time, or you don't want to disclose as a seller, you don't want to disclose all the confidential information that buyers want to see. So having a broker helps to kind of process and weed out people who aren't qualified. And it also puts up a barrier with, non-disclosure agreements, which I know you use. And so the buyer wants to see some, preliminary financials, they have to sign a confidentiality agreement. And then you're talking through with the buyer that, the seller doesn't have to do that. So, and again, the seller's legal fees are also reduced because you're handling a lot of those pieces that would otherwise be done by us.
Well, you're using my favorite word, and that is process. So, we can ask buyers the tough questions. A seller can't, it's not ideal for a seller to ask a buyer on their first discussion, hey, by the way, how much money do you have to invest? But that's part of our job. So we can ask those difficult questions, and we put a process to it. So if a buyer doesn't understand what's appropriate to ask for and they start asking for everything, we'll educate them and say, hey, listen, this is the process. This is how it works. Conversely, we also help educate the seller. And I go out of my way to really get to know the businesses that I'm assisting. So I find that most of the lenders can come to me when they're in the process of reviewing a business, and I can usually answer the lion's share of the questions. So they're not sitting there having to go through a 100-question survey of some form, because I know how to answer a lot of those questions, and I can save them a lot of time as part of the processes that we put in place.
And even before you list it, you're working with the seller to get all of their ducks in a row, right? I mean, you're saying this isn't going to fly. Let's fix this financial statement, or you're spotting some issues in advance that would otherwise perhaps cause a qualified buyer to get scared or say, no, I'm not going to go forward with that. You fix it, and then when you put it on the market, hopefully it's in pretty good shape to the extent that you can.
Correct.
So I think that I want to start talking about the process, since you're on this, and go through what the process looks like of the purchase of a business, whether it's from the buyer side or from the seller side. And what I want to stress before we go into this is that there are consistent stages of how a business is bought and sold. And right now I'm seeing a little bit of urgency from some of our clients that are doing this. We've got several deals going on right now, and it seems urgent. And I think because of the pandemic and some of the economic issues that are going on, and the deadline for the SBA loan, people are feeling this sense of urgency, like they need to rush the process. And I want to say something, and I want you to chime in and help me convey this a little bit, is that while the process is what it is and the stages are what they are, you can go through the process fairly quickly if everyone's on board, hustling to get it done and doing what they need to do to move the ball along. But skipping the steps just to get to the end quicker is a recipe for disaster. And I want to say that, if you're in a hurry and you're wanting to get to closing and get the deal done, because either you're a seller and you have pressing urgent needs that this needs to happen, or you're a buyer and you're just excited you want to get it done and get in on the deadline of the SBA, sellers don't want to get caught up in business problems after the sale, right? So sellers can get dragged back into whatever difficulties might be after they've sold the business. They don't want that. So in order to cut all those strings, you have to go through the steps and make sure that those strings are cut. And when the seller walks away, they're walking away. The buyer, on the other hand, wants to make sure that they understand what they're getting into. They don't want to get into a business and then figure out, oh my gosh, there's this, huge thing that I didn't even know about, and now it's on my shoulders to deal with, when the seller is the one that should have handled it. And so coming in with your eyes wide open and having a plan in place to step into that business and take it and run it the way it needs to be run is all about stuff that happens before closing. So let's talk about the stages of what a business sale and purchase looks like, and we can talk a little bit about each stage as we go through and kind of see some pitfalls and tips we might want to give to people. So what is, in your mind, what is stage one? Because I think your stages start before my stages start.
Well, yeah. And so if we're talking about where they truly start, it truly starts when I first speak with the seller and you've already touched on this, and I've touched on it, just talking about all those different items that I discussed initially in the call, where we're looking at depth of staff, we're looking at, and forgive me, this is part of the challenges of being at home at the moment. So you are hearing my cat scratch at the door. So I'm so very sorry.
Just invite her to join us. Invite her to join us.
So my cat loves me so much, I had to open the door so it could come visit. So I apologize for that. The joys again of working from home these days, right?
Absolutely.
So better than one of my kids. That's all I have to say. But yeah, so it really starts initially when I speak with these sellers and get the information at hand and try to get all those things formulated. So that when I'm bringing a business to market, that they kind of already know what to expect. We kind of already know no business is perfect. There's no such thing. But for us to understand where the potential concerns are, address them with the buyers early. I don't like surprises. Surprises kill deals. They make for unhappy buyers. I don't like that either. So we're going to try to address any concerns on the front end and make sure that everyone's aware so that we can decide whether or not this is the right fit for a buyer moving forward.
So you've got business prep. So you've got the prep that goes into pre-listing. So the prep with the seller, then you list it, and then you have some negotiation time when buyers come in and they're looking, kind of doing their preliminary, look at the business to see if this is something they want to go forward with, right? So you've got the shopping phase. And then if you've got a buyer then that wants to put in an offer, what happens then?
Yeah, so if I have a buyer that wants to put an offer in, generally, I'm the one that writes a templated form for that purchase offer agreement. But the things that are important to know in that document are, it outlines what kind of sale it is. So is it, most of the deals that we do are asset sales. So it is extremely rare for it to be a stock sale. And for those of you that don't know what that is, asset is where you're opening your own corporation and you're buying the assets of the other person's corporation. Whereas a stock sale, you're actually buying the other person's corporation. So there aren't too many instances where a stock sale makes sense in my world, but occasionally it does. So it outlines
Mine
that.
too.
It outlines, the equipment that's being conveyed. So there'd be an equipment list attached. It talks about the due diligence period, which is extremely important. Due diligence is the time where a purchaser generally puts some money in escrow and has the opportunity to review the documents that are requested, whether that be tax returns, merchant service statements, leases, really the whole enchilada. And that's where it's important to have team members, both on the legal and the accounting side, to make sure that these buyers are asking for the right things. And then, there's usually a contingency in there for the lease, if it's a lease space. If there's a play on the property, we handle that in a separate document for purchase of the real estate. We talk about inventory. If it's an inventory heavy business, that's exceptionally important because we want to make sure there's an understanding of how much inventory is being conveyed and that it's good and marketable inventory. We talk about how the equipment has to be in good order. If there's a franchise involved, we put in a contingency for the franchise. If there's lending involved, we put in a contingency for the lending. So it's sort of I always call it the framework for putting a deal together, making sure we all know what the rules are and making sure that the buyer is protected in the process and that the seller understands what the steps are.
So let's talk about this contract that the buyer puts in, and a lot of times the buyers consider this like the offer, and the offer is this kind of fleshed out piece that you've just talked about, all the different topics that go into that. So it's not an incredibly long document by my standards. It's pretty scaled down. And yes. So what you're really trying to do right now is you're trying to get the bones of the deal together. And you're saying if the bones work between the two parties, then let's go into phase 2 or phase 3 from your perspective, which is the due diligence phase. So you've got the offer, the contract, the bones signed by both buyer and seller. And now it's going to give the buyer a certain time period to do due diligence. And due diligence then is a time period, like you mentioned, for the buyer to kind of come in and say, what is this business really doing? What's here that I need to see? So in my perspective, there's actually 2 purposes to due diligence. One is to look under the hood and to say, what am I getting myself into? what's the good, the bad, the ugly, because I want to come in with my eyes wide open and make sure that this fits me. So you're looking at the employees, you're looking at taxes, you're looking at the financials, you're looking at all the inventory, you're looking at the lease to make sure that this is a good spot for you and you know it's an okay deal, you can live with this. And you might have to sign a personal guarantee with the landlord, so you want to make sure it's a good lease. All the different things that you have just talked about. And we have a checklist, a due diligence checklist, and I'm sure you have one as well, that you look at all these different pieces during due diligence. So that's the hood check. The second piece for me is, and I'm sure it is for you too, is it's the preparation. So I tell my clients that, yes, you're looking under the hood, but you need to start preparing for transfer now. So this is kind of putting the things in place now so that when you close and the day that you close and you stand up from that table after signing, you own this business and you're ready to run it. So due diligence in my mind is actually a two-phase due diligence. It's a look under the hood, and then if you like what you see, now it's time to start prepping for that transfer and putting some things in place for that reason. What other things do you see for due diligence? Anything here you want to point out as like maybe a pitfall or a tip?
No, I think you've covered it pretty well. I mean, like I said, I can't emphasize this enough, but leveraging your partners, the CPAs and the attorneys for a second set of eyes is huge. You know, understanding, I think having a preliminary understanding of what it means when a broker does a recast and understand what those add backs are, what the banks will take, what they won't take, and what that means to you in the process as well. So I think those are all things that are really important to understand and just educate yourself as a buyer on those different aspects. And again, a broker will help you figure out what these things mean. You know, what is a recast? Why are they adding back, you know, their daughter's vehicle insurance? Yeah, well, because it shouldn't have been run through the business in the first place, but neither here nor there. Which of those add backs are the bank? If there's a bank involved, what will they accept? What won't they accept? You know, what is, I think one of the biggest things and pitfalls is for buyers not being educated on what the bank expects early in the process. So it's not just about plunking down. Let's give you an example. All the banks like to say that they'll do deals with 10% down. Conceptually, that is 100% accurate, but the truth of the matter is the banks like more than 10% down. They generally like to see 15 or 20% down, even if it means, you know, part of that, a small percentage comes from the seller. So educating the seller that that's a possibility and that they would be a second to a bank if they offer 5% seller held note or 10%. But that does do a lot to strengthen the deal. You know, buyers understanding that the bank is going to ask them to collateralize the equity in their home as part of this process. So just understanding a lot of those things early on so that you're not actually finding that out during due diligence. You're actually finding that out before, so you can say to yourself, you know, is this the right thing for us? Is this the right deal? Are we going to stretch ourselves too thin if we put 15% down? Are we okay with collateralizing our equity in our home for this opportunity? So I think a lot of it, I mean, of course, due diligence is hugely important, but you've got your team members hopefully in place to help with that. But I think it's making those decisions early on about, is this the right opportunity? I think are equally as important.
So I wanted to talk then about the team, because what you said is important. And I think, you know, brokers are critical to this due diligence phase because they can help interface with the bank. Because you speak bank language,
Sure.
You can tell the bank the information that they're really asking for, and then you can explain to the buyers and the sellers what the bank is really saying. So there's the bank, the financial piece. There's the numbers, and making sure all the numbers work is really a good thing for brokers to help with. The accountants. I've done several deals where accountants have played a critical role in looking back through the financials. And maybe it's, you know, maybe at the beginning you're seeing, you know, a profit and loss statement, maybe you're seeing a balance sheet for a year or two, maybe you're seeing some tax returns, but you don't really get into the deep financials of looking at the books until this due diligence phase. And that's where accountants can come in and kind of see what's happening and get a better picture. And I've had circumstances where, I'm working a deal, and the accountant comes up and says, "Hey, what's this here?" And we realize, oh my gosh, there's sales tax issues. The sales tax returns haven't been filed, and now we've got the sales tax piece. Well, is that something we can address prior to closing, and the seller can fix it, or is that something that the buyer is going to have to account for if they want to move forward? So the financials are really important with accountants. And if you have an accountant that you're already working with, just be sure that they're comfortable taking a look at some of the business books. And if you don't have an accountant that can do that, obviously your broker or your attorney, we all have, a handful of accountants that we work with on a regular basis. Did you want to speak to that?
Yeah, I just was going to add to that. I think the same thing happens whether it's an attorney, an accountant, or a banker. A lot of people say, "Oh, well, I've had the same CPA for 20 years, or I've even had the same lender for 20 years, or attorney." That doesn't mean that they're the right fit for this type of transaction. So that's always something that I'm a little leery of. I can give you so many specific examples where things have gone wrong just because the right player wasn't in place to do their piece, because it is a unique situation when you are buying a small business, when you've got the SBA involved. There are just a lot of moving parts, and you want a team member that has already been there and knows how to do it.
And that's true for attorneys, like you said as well. And as you said that, I'm having flashbacks. I've practiced for 17 years, and I was having flashbacks to some really early deals that I was doing in my early career. And it really does make a difference if you've got professionals who are experienced and knowledgeable in this type of deal. A general practitioner is great for kind of, icing surface level sometimes, but if you go into a specialist, it definitely makes the process easier and can flag some issues early and have some solutions. So I want to go over a little bit about, we talked about what accountants do. Attorneys, and help me kind of fill in the gaps here. Attorneys, we can look at leases, we look at contracts, especially for service providers. A lot of us have contracts that are in place with our clients. Will those transfer? You mentioned that earlier. You've got vendor contracts. A lot of times with vendors, you want those contracts to transfer because they're good deals, and so you want to keep those. And looking through what all of that means. It's also part of looking at employee issues, because we talked about the differences in asset sale versus stock sale. So the asset sale, and I'm very visual, so I have to kind of use visual imagery. So the business has a container, and the container is like a box in my mind, and the box is either a corporation or an LLC. Inside the box is the assets. So you could buy the whole box with the assets in it. That's the corporate asset, or the corporate sale, the stock sale. Or you can leave the box, create your own box, and just move what's inside of it over to your new box. Obviously, both of those are two different types of sales and come with pros and cons for both. Most of the time we see the asset sale, because when you take the box, you get the good, the bad, the ugly. If you do a stock sale or a corporate sale, you're buying the LLC, you must have an attorney. There is no question about it, because that is so complicated that needs to be directed by an attorney. An asset sale, because those are more common, the asset sale, sometimes people think that they can do a lot of the due diligence pieces on their own, because they think, well, the bad and the ugly is staying with the seller. I'm just taking pieces of the assets with me. And for the most part, that's very true. There are some exceptions, however. Taxes, if you're buying a business and you're getting all the assets, and those taxes haven't been paid, those can follow the assets to the buyer. So taking a look at those. Employee issues also are a big flag, because a lot of times when you're buying the business, you're taking the employees with you because you want them, obviously, as a buyer, because they know what they're doing. But also there's so many employee protections in the law that those employees can still come back even after that business has been sold, about something that maybe the seller had done. So those are, I think, the critical pieces of the legal parts that you really need to make sure you understand. And And one other thing is, recently did a deal about a year and a half ago where very specialized industry services, of course, that's all we do is service companies, and had really experienced, licensed people as employees. And the buyers wanted to make sure those employees were staying. And so to put those employment agreements in place in advance, and they wanted to add some non-competes because the seller didn't have non-competes. So they wanted to make sure those were put in place, and they had the employees on board before closing, so that when they took over, everything was in order. So those are what I was telling you about, like during due diligence. To my mind, the second part of due diligence is prepping for the transfer. What are you wanting going forward, and making sure that all of that can happen. Making assumptions that you can do things without really kind of following into it can end up where, okay, day after closing, and you thought you could do this, but now it turns out you can't, and you wish you had known that before. So those are some of the pieces.
You're beautifully illustrating the point. You need a team member that knows what they're doing in this space.
So that's due diligence. Now let's move to closing. So what happens at closing?
What happens at closing? Well, hopefully, if we've done everything right along the way and we've had some good discussions, the buyer has an idea of a transition plan with the seller that they're going to implement. There are some exceptions, but often the employees do not know about the sale. So, there's all kinds of fun things that need to happen. Introduction to the employees, training, making sure that anything that couldn't be transferred in advance of closing has a plan to be transferred. And the sellers are very integral in that piece. The buyers and sellers are going to have to work hand in hand. And depending on the complexity of the business, the sellers may need to stay on for a little while to make sure that that transition is smooth.
So we do see a whole lot of times when the seller stays on for a period of time, and the seller, that could be part of the bones of the deal that are negotiated up front, is that, maybe the seller agrees to stay on for a couple of weeks or several months at no additional pay, just to make sure that the transition goes smoothly. And there's mechanisms that we can put in place to make sure that the seller doesn't just say, peace out, good luck, see you later, I'm out, I got my money, I'm done. And then there's some times where the seller might actually stay on, for a little bit of time for additional pay. So all different kinds of pieces for that, as well as, the seller's non-competes. Make sure that the seller can't just turn around and go start up another business and compete with the one that they just sold.
Absolutely.
All these different pieces are handled during the process. So to me, the closing is really, it's the big show. You sit down at the table, everybody signs. When you stand up, the transfer is done. It's very similar to the closing of real estate, right? When you sit down, you sign the documents, and that actually transfers title. But even after closing, there's transfer of the business, but then there's transfer of the operations. And so that's when the transition piece goes. It's the bank accounts, it's the keys, it's the passwords, it's the social media accounts, it's the phone numbers, it's the utilities, it's all the things that come after the closing. You get up from the table and you're like, okay, now I've got to get all this in my name. I like to start that at the end of due diligence to make sure that, there's no hiccups there and it's a smooth transition through. Anything else that you've seen after closing that people might need to be aware of? Tips or anything?
Well, it's funny, in today's day and age, we don't think about something as simple as bringing the key to closing, but that's been something that I've had to remind people of because, do they technically need a key the day that they close? Not necessarily, because the fact is they're still going to be working with the seller. They're still going to be, there's a lot that needs to happen before they start feeling like they're the true owners of the business. But it is, to your point, ceremonial. So to have that kind of ceremony, that changing of the guard, that's, there's just something cool about when you see the seller handing the key over to the buyer, even though it's, it really is just is a ceremonial piece in many instances.
Yeah.
But yeah, no, I think you've covered a lot of it. Now with social media, that's always a big one, making sure that you know how you're going to transfer the website, that you're going to know how to transfer the Instagram and the Facebook accounts and all the other different outlets that are available. That's a piece that, I don't want to say it's new. It's certainly not new, but it's newer. I mean, it's not
Mhm,
something that I worried about 14 years ago when I had my first closing, but it's
mhm.
something that is obviously very important today.
It's a part of the intellectual property of a business. So you've got hard physical things that you can touch that get sold, but you also have these intangible things like goodwill, of course, and goodwill is associated with the name of the business, the location of the business. Um, and intellectual property can be all of those things. It can also be the social media presence. It could be even the checklists that you've produced, or it could be the process that you've created. It could be articles that you've published. So for our clients are professional service providers, and they're usually publishing in journals and articles and writing things and doing videos like this. And so it's the intellectual property really capturing that and being able to transfer that is important. And one piece on that I probably should say is, while many other types of property can be transferred without documentation, intellectual property cannot be transferred without written documentation. So it's really important that that is not forgotten in the process, and making sure that those assignments, those transfers of intellectual property actually happen. We've got some questions here, and I know we're getting ready
Oh,
to wrap up. So let's go ahead and go back to some of these questions. One is about the SBA loan. How long does it typically take to obtain a loan, SBA or otherwise?
ooh, yeah, that's a great question. So again, small business, it's SBA. It's exceedingly rare. Conventional is a lot faster, but I generally tell people to plan for about 75 to 90 days. Conceptually, the loan itself is probably more like 60, but there's a lot of things that need to happen in the ramp up stage. So I think 75 to 90 days is a more realistic answer.
Okay. And do they have to know the business that they're buying before they can submit the application?
So there are some things that they can do in advance. So they absolutely, if they're looking at seriously buying a business, they can go ahead and start putting some wheels in motion, and they can have a lender help them figure out really what is the max that they can qualify for. So I think that's a great idea.
Okay. And then, but when they do their actual application for the purchase, the bank wants to know what that business is. So then they have to
There's no
submit the
question.
business
To
information. Yeah.
truly do an application, you would have to have both sides of the equation. So, but a lot of brokers are going to get their business's lender pre-qualified. So the lender is basically looking only at the sell side and saying, look, in concept, we like this deal. If you bring us a qualified buyer, and of course they get to decide who's qualified, because they'll look at not only things that we expect like credit score, but they're going to look at things that we might not consider, which is experience. So if you've never owned a restaurant and you want to buy a restaurant, they may say they're not willing to lend. I mean, every lender's appetite for that type of risk varies considerably. And again, that's why it's important to know which lenders like to do what deals. Because if someone came to me with a unique situation where they didn't have experience, or even if they maybe didn't have the best credit score, like there's some kind of outside situation that needs to be considered, there are lenders out there that, even though everyone is under the rules of SBA, the interpretation of those rules
Yeah.
vary considerably from lender to lender.
So true. So true. So the sellers, if they get their business pre-qualified, that basically saying that there is a bank that exists that will loan on that business because they like the way that business looks. Then if the buyers are pre-qualified, there's a bank that's going to say, we like you, buyer. We think you're qualified enough and have the financial capability to go ahead and buy a business. So
Mhm.
if you got those two pre-qualifieds together, obviously it goes a whole lot smoother. And so is this 70 to 90, did you say 75 to 90 days
Yeah.
for the SBA? That's when the bank actually gets the information about the business, the true application.
Well, that's when, yes, that's when they get the information on both the buyer and the seller at the same time. So
Okay.
I'll give you a quick example of times where you would think, oh, one's pre-qualified, the other's pre-qualified, no brainer. Not necessarily. So it also depends on what numbers did the lender use to pre-qualify the seller's business. So let's say I have to make $100,000 a year to support my family. Well, maybe the pre-qualification rather was only at a $60,000 owner salary. Well, what are you going to do? Well, then the bank may say, well, listen, you need to make a lot more money than this business is throwing off in terms of free cash flow. after debt service, because they obviously are going to have a percentage of wiggle room in there. They're not going to give you the exact amount that you need. They're not going to say, okay, you need $100,000 a year to survive, and you need, $40,000 to service your debt, whatever. I'm just making that up. You're good. They're going to want a margin of error in there, if you will. So they like to have some debt service ratios that encompass a little extra wiggle room. So those are the kind of things that you can almost find any lender to give you a pre-qual. So it can be misleading. But again, if you've got a good broker, pretty much right away that broker has asked those questions and can quickly say, hey, listen, how much do you need to support your family? Oh, well, you need $300,000 a year. Well, this business might not be right for you. Yes, it looks on paper like it's cash flowing enough for you, but we have to consider debt service.
Good points, all good points. And then one more question about the SBA. We talked about the SBA deal that they're offering right now, which is September, what was the date?
27th.
September 27th. If you close by that date, there's a certain incentive that the government will pay the principal and interest payments for 6 months. Is that for the purchase of businesses, the purchase of existing businesses? Is there any restrictions on that? Any types of businesses that are restricted, or is that just any business?
I haven't heard that there are any restrictions around that component of the CARES Act. Now, generally speaking, SBA does have some restrictions, I'm not really sure if it's the SBA or the lenders, but there are certain industries that certain lenders don't like to lend on. So usually if they feel, in their opinion, that there's any kind of moral concern about the business, for example, there have been questions about people who do work with legalized marijuana. That most banks have not gotten comfortable with that concept. So that's usually a tough sale, but sometimes there are some lenders out there that can do that. But as far as any specific restrictions around that 6 month in the CARES Act, I'm not aware of any.
Okay, very good. And any differences with either a brick and mortar business versus an online only business? Have you seen any differences?
Well, I will say that I have sold online businesses and they are pretty popular. We do usually get some good activity on those. The only difference I could tell you off the top of my head is there are certain buyers, we didn't discuss them today, that are visa buyers. So, and we don't know how visa buyers are going to be impacted by COVID. So we'll see. But folks that are from overseas, whether it's Canada, Europe, South America, that are looking to come to the United States and are buying a business to be able to get a visa to stay in the country, those folks need to have a brick and mortar. They need to have a physical location to qualify for that visa.
Interesting. So that's an overlap with immigration law. There's certain types of visas that and there's certain levels of investment that you have to have, certain dollar amounts that you have to invest on all that. It's very interesting. So other than those visas, the online only businesses are selling just as if as the brick and mortars are. There's no detriment to them.
No, as a matter of fact, I guess there could be depending on what you're selling online, but for the most part, we're seeing online businesses are increasing. I'm working or anything related to that. It doesn't necessarily just need to be an online business. It could be a transportation and logistics company like a FedEx routes that are actually considerably growing post-COVID.
Very good. Thank you. I know we're 5 minutes over. Thank you so much, Bianca. I appreciate your time and, of course, always your expertise. And
my pleasure. Thanks for having
let's
me
go
today.
ahead and put your email address in the chat if you don't mind, and I'll put mine.
Sure.
And if anybody has any follow-up questions, you can reach out to Bianca or myself.
If I can figure out which button is the chat, we will do that.
I can do it for you.
You might need to, because I don't want to keep everyone held up here. Let me give you it's my first name. Oh, I see the whiteboard. I guess that's it. It's Bianca, BIANCA at Tworld. That's the letter T, followed by the word world.com. And then my phone number is 904-254-7846.
Okay. So I have put your in the Bianca at tworld.com, 904-254-7846. There you go. All right.
That is correct.
There you go. And we have recorded this, so everyone will receive a recording of this. And for those of people who registered who weren't able to attend live, they'll also get a recording. Thank you so much, Bianca. Appreciate it as always.
Thanks, Laurie. Great to see you. Thanks,
You
everyone,
too.
for listening. Take care.
Bye-bye.